Hi guys, how is everybody? Welcome to another Crack the Sky video. This is a little follow-up to my previous video on Fortescue Metals Group. I think it's an interesting subject and something I like to talk about. Our main topic today will be, will Fortescue announce another massive dividend distribution in August?
We are here to crack your financial sky. Here to give you guys information, really, just to build up everybody's confidence, I suppose. Give us a thumbs up, give us a subscribe, greatly appreciated. Definitely helps me along with my work and getting videos out there, expanding the audience.
Just a recap. There was a surprise announcement of an out-of-cycle 60 cents per share dividend on the 14th of May. That makes the total payout for the 2019 financial year 90 cents, so through the roof like a rocket. We all like to see a few dollars back in our pocket after we've been waiting for quite a long time, so good to see. FMG's been taking advantage of the jump in the iron ore price. When I checked just before, it was roughly $98 per ton, so that's US dollars, I should say. So the big thing with FMG at the moment is there's a narrowing of the discount for the low-grade iron ore product towards the high-grade iron ore product. So FMG is a lower iron ore producer. I mentioned in my previous video that JP Morgan thought that investors shouldn't be expecting a final dividend when the full year results are announced in August. There's a few more thoughts, I should say, around that now from other different brokers. So I just thought it'd be good to have a look at that and sort of see how they think and what their feeling really is. So UBS noted that FMG's interim dividend declared in February represented a payout ratio of 104% of the underlying earnings for that period. Assuming 100% payout ratio, UBS believes FMG could declare a 40 cent per share dividend in August, but I think that's kind of unlikely. So just a note from Credit Suisse. So Credit Suisse are predicting an additional 8 cents per share dividend for FMG to be paid in August, or announced in August, I should say. The main reason for this is the Credit Suisse expects that the peak iron ore price should come in the September quarter, and they're predicting that the top of the iron ore cycle will be $110 US per ton, and mainly they think mainly that that's going to be due to the export inventory. So the port inventories in China actually sort of getting much tighter around that time because they're just going nuts producing. So Credit Suisse thinks that FMG is an interesting investment in the short to medium term, given the limited global supply response to the iron ore market tightness and continued strength in the China crude production. So hasn't been a very quick response to produce more iron ore to fill the gap left by Vale, and also pretty much the production of steel is still cranking along. So the Chinese need the iron ore, but there's just not the production is just not there at the moment. I think Macquarie is probably the closest to being on the mark, and they've calculated that the previous announcement of the 60 cent dividend represents roughly 80% of the second half earnings. So that's using their own lower iron ore price forecasts. So FMG flagged that the payout ratio will be between 50 and 80%. So if iron ore prices continue to hold at these levels or rise, the broker, being Macquarie, they can see that there's a possibility to actually pay out another 20-cent dividends, and that will still fall at or below the 80% level of the actual full payout as classified or set out by FMG. So for the time being, FMG has paid a fully franked dividend of roughly 11%. So Macquarie notes that the iron ore spot price input into its valuation model forecasts and earnings would rise by 22% and by 100% in the financial year 1920. So there's a huge upside in earnings if things stay the same or very close to the same. So Macquarie also believes that Rio, BHP and FMG are capable of increasing dividends or announcing special dividends in the near term. Macquarie maintain the outperform rating also on Rio and BHP. So given their major exposure to iron ore, so that should drive earnings and allow excess capital return to shareholders. Also, I've read some news from Brazil, and they're talking about not necessarily closing mines, but they've actually had to close train lines because these train lines are actually close to or near tailing storage dams that they think are actually potentially going to collapse. And what they're worried about is the vibrations of the trains as they pass by, moving the dams much quicker. So they want to try to prevent and stop those dams collapsing. So that will quite possibly actually have an impact on production as well. So if you can't run the trains, they have to try to find an alternate route, or they just have to stop or slow production or something. So anyway, that's it for today. So hit that like button, and also if you're inclined, please subscribe. Trying to pump out some interesting content for you guys. Things are gradually getting better, so things hopefully will come along a bit better as we go along and gain some more experience. And have a great day. Ciao.